All right, welcome back to the channel. We're going to go over the Nasdaq and the S&P and how exactly they moved today and the big things that are setting up in the background of the overall economy, the giant red flags that have happened back in the past around 2018 and 2008 that set up for massive dumps across the market and that are happening as we speak right now. Before we get into that content, I would recommend that you like and subscribe. It helps out the channel tremendously. However, just so you know, we are making videos every single day between 5 and 7 p.m. Central, giving you updates on the market and giving you education about how we are trading as well here on the channel, just so you know. Let's not waste any more time. Let's get to it. Before we even get into any of the charting and any of that type of content, what I want to go over is some of the news and key things that are going on globally right now that, again, are setting up for this crash. I'm not just making this up. Do your own DD, not financial advice, but let's jump into it. So you can see that they actually just announced a fixed 30-year mortgage. This is the nation average right now. It's at 5.13. 1 week ago, you were at 4.9, so you jumped up about 0.2 points. All the way to 5.13 in just a week. Since the beginning or end of January, roughly, you were sitting at around 3.72. You can see in the beginning of January, you were sitting at 3.33. So you're up almost 70% across the board, specifically when it comes to the mortgage rate. Yes, you're seeing one of the largest increases overall. You have not seen a spike like this since roughly the beginning of 2016. And then also you had one in 2014. And of course, you had it back in 08. But the big ones we're looking at is when it started spiking. Once again, you had this going on in 2018 to when the market started to take a tumble. Then you also had this back in 2008, 2009, again, when you started to take a tumble. And we're going to get into specifically why those dates are important. Now, before we get to the juicy stuff, what I want to do is give you the Nasdaq and the S&P and how those are moving right now, where big money is buying, the volume, everything like that. Overall today, you had a pretty decent move, and I want to just highlight something specifically. So this morning, you're getting pretty much stagnant volume. I mean, this is kind of nothing. You get that immediate, influx of volume to start the day, and then you're kind of trending up with no volume. You're pushing right now. So I'm going to get into my opinion on that here in a second. But what we were looking at yesterday, what I told everyone going into yesterday, is that you needed to hold 14,000 on the Nasdaq. That's what you had to hold, 14. That's what you had to hold on the Nasdaq. Guess what? You started to hold it. You held above the daily right here. You shot up, and then you started pushing towards that weekly, which we had marked out. 14.25, the highs of the weekly at around 14.3 flat. That was going to be our local highs. As of right now, you are getting somewhat of a double top around that region right there from the previous highs of yesterday as well. So again, as long as you're holding above the 14 range, you're going to continue pushing back up. And that is the catalyst for the bull case here. But as long as you're below 14.3, we're always going to have you as a magnet pushing back down to 14 flat. So if you get back above 14.3, we're looking really bullish right there. Again, if you hold below 14 right here, you're going to be pushing down to 13.7. And we're highly in favor of retesting those February lows as long as you're holding below 14, which you are not right now. So again, I just want to let you guys know that we're not necessarily saying you're going all the way down to 13. We do cause for a longer term viewpoint of a negative, but as we're looking at this right now, if you're holding above 14, you're sitting in a very good position. If you're holding below 14, you're sitting in a very negative position. Going to want to push down lower to the low 13s. And I believe in that case, bears have all the momentum. As of right now, you're seeing that top line resistance at 14.3. Now, as we take a little bit of a zoom out, you can see you're kind of starting to try to break this overall trend going on right now. And that's overall pretty good news. This is something that's been going on for about a week and a half. You can see that trend you did break today. That is good. So going into tomorrow, what do you want to see? You want to see you start to get back above this green line, the end of the weekly. So if you can end the week making a higher level, in my opinion, that is going to be good news, and that's going to have you set up to continue this run going into the next week as well. It is a short week. We have multiple expirations on the S&P, back-to-back days. That's never really good. Typically when that happens, the next day is kind of an opposite day moving. Fingers crossed you could continue going, but we need to be getting into some of the other stuff as well. Going into SPY, we're mentioning the same exact things we talked about yesterday. Go watch the video if you need to. Overall, the census on the market right now, of course, is going to be to the downside, the bear theory. That's what we're siding with. But we had to notice you were sitting in this descending wedge when you were having this happen. The low was going to be about 435. The highs we mentioned, if you held above 440, 441, boom, you're going to press back to that weekly around 444, 445, and you're hitting that at the end of the day and getting rejected pretty perfect. So going into tomorrow, it's going to be a bit of a wild card. But if you start to get back above 444, 445, I'm in favor to start pushing back to 447, 450 in a hurry. I could easily see you trying to get a double top range of this right here around 450, 450 flat, but you're going to have to hold above that 444 region. So this could be a very bullish into the week. However, if you open up below this range, I'm in favor of pressing back down, and you can start getting back below 440 in a hurry as well. You can see the Nasdaq and the SPY are at big resistances, and you're always expecting an initial rejection from those resistances. So we'll have to see how it plays out in the after hours going into tomorrow. Now, going into Bookmap and looking at the heat map, painting a picture of what hedge funds are doing today on the ES, this is going to give you a great visual of what's really happening, where buyers and sellers are battling right now. Today was an extremely low volume day. It's worth mentioning, very, very low volume. Again, it is a holiday week, so it's a shorter week of trading, no Friday trading day going on. So I expected less volume this week, really going into it, but you're still getting some decent volatility. Now we have those same type of walls, and if you're new here, again, black means there's no liquidity, red means the most, orange is very close to red. So that's where a lot of liquidity is going on. So you're seeing that battle, that just overall uptrend going on right there, right? Just solid uptrend. But what I want to highlight here today is going to be the CVD, the cumulative volume delta. And this is going to paint a very good picture of who is in control specifically today, because we were talking today, really talking about what was happening with the market. And the big thing that came across was the lack of volume. And this had me looking at the market in a bearish lens. But the important thing to really take from this is you don't necessarily need great volume in a direction to get you to continue to push in that direction. For instance, today, the bulls didn't need that much buying power if there wasn't that many sellers on the market. So if there was no one to hold the market down, if there was no one to sell against the market, then you didn't really need that many people on the offense. So there's not that many people defending. You don't need as many people in the army to overrun. And that's a big thing going on here today. So you saw the spread initially out of the gate. You had a major jump on that CVD, and you kept climbing all day long. A good, for instance, is yesterday, we were in the negative all day. Even on the bounces, your CVD was at lows below zero. This is showing that overall buyers had complete control all day. You never even made a lower low. CVD continues to climb as we speak in the after hours, but I will say after hours are pretty iffy. But looking at today, you can very much see that the buyers had control as far as the hedge funds all day long. And when you really zoom in here, you can really see those levels being claimed over and over and over. More liquidity walls being taken out throughout the day, all day long. The big thing to take away from here as well is that you cannot break ES at that 44.50, and you can see that level was set there. The only place of defense that was really set all day was 44.50. You had major sellers there all day long, and they really started stacking up positions as you got close. And then, of course, you ended the day at resistance, pushing you down, which really gives you the overall viewpoint of why you got that rejection at the end of the day and how big of a leap and how big of a fight it's going to be to get above that region. Because if you get above 44.50 on the ES, chances are you start to get really bullish on the market in general. Now, I'm going to wrap up pretty quick, but the last thing I want to look at is going to be the 10 to 30 year yield curve. And this is a broader spectrum of the market, giving you a better look at really what's happening as a whole. And I have 3 points marked out for you. I have the 06 to 07, roughly 08, when you have that yield curve going on there, the yields flipping, the 10-year flipping over the 30-year. Again, you have it happening here in 2018, and then again, you have it happening right here, right now, 2022. But what does this say about the market? What does this really give you a representation of? So what we're gonna do is we're just gonna add the SPY right on top of this, and we're gonna click it in here. So this is all we're gonna do, just come out to a full chart and see what really happens every single time. We're just gonna grab our drawing tool. Forgive me for the doodles, but it has to be done. So the first time you have that topping out happening right here, roughly right there. From that range, you can see you start to push down, instantly pushing down, roughly a 50% total drop when it comes to the S&P as far as percent gains there. So you can see more is happening here. Then you have that major drop right here. Once again happening back in 18 from those local highs about right here. You can see that topping and that flipping going on. Double top right there, really getting the complete flip going on there. You can see you start to make a relatively big drop once again from those highs when it comes to the S&P once again right there. And then you can see the S&P starts to take that drop from right there roughly to there. So a decent sized drop, a decent leg down, not considered a recession by any means, but it was still a decently steep drop. Now coming into right here, The question is this the drop? This is the $1 million question, if you will, is this really considered the drop that you're getting here? Because if you're having it, you haven't topped off yet on those yields. You haven't reached that same range that you had previously. What's going on here? And in my opinion, you haven't. I think this is a little bit misleading because you got this drop a little bit soon if you are looking how the market's been moving. And if you're looking here, this is really in effect solely from what happened with Ukraine and Russia. All of this right here is from Ukraine and Russia. And it definitely made you get a little bit of a jump. Where you started to see this spike in general was back around Thanksgiving. It's something I want to highlight. So once you really started getting the spike, it was about right here with Thanksgiving. You made that low and then you just shot up in December, going through February, came back down and then shot back up, and you're reaching those highs right now. That's really important to notice as you are officially reaching those levels. So in my opinion, I think there's more room to come down. Now, to give you an exact target, it's going to be extremely hard to do. You still have a lot of global tensions in general. You have a lot of inflation happening, and it's not slowing down. You have people saying we're at the peak, but in my opinion, if you're looking at yields, you're just now peaking. You're just now getting that complete yield curve there. So I'm expecting potentially more downside. The question is how much do you really come down? And I can't give you that exact answer. But as we're looking here, you can see it is setting up for a very similar caliber type of move that we had previously. Now, we've had run up a lot since COVID, things like that. And people are going to say, well, wasn't that the drop? I don't believe it was. And it's showing that we're not as impenetrable as we think we are because you just already started seeing that little drop going on from Ukraine and Russia. And I think that's just the tip of the iceberg, and things are going to start spicing up here very soon. Now, does that mean that you can't make money trading the Nasdaq? You shouldn't be trading stocks to a bullish point of view. No, that's not what it means. You can trade stocks to a bullish side of the market. You're still going to be able to make money. However, I think in the long spectrum of things, we have to take a step back and realize that this will pop very soon. It will happen, and we're getting to those critical levels like we were seeing. And the last time we started to see this was, guess what? 2018, when we had that last yield inversion, and then boom, once again, back in 2008. The same cases, everything's happening the exact same based on those charts. So you need to keep your head on a swivel as usual. I'll have more updates coming. I expect a little bit of upside potentially. We need to get back above that range right there. If you do, Nasdaq can continue, SPY can continue. But as of right now, I think there's more risk to the upside, even on the short-term trading spectrum, than there is to the downside. That's how I'm trading it. That's how I'm looking. The Twitter link is going to be down below for updates throughout the day as well, but make sure you guys are liking and subscribing because I'm posting videos every single day about the news you need to know about the market and how it's going to be moving going into the next trading days. Again, have a good one.